My first property was a single family home that I bought. The job was supposed to take 2 months and $30,000. It took 7 months, cost me, and it looked like a dog's breakfast. It was at that time that I realized that the biggest uncertainty in real estate is, and I gave it a shot at trying to. Today, we're just over 200 units. If you're starting off or I would say don't change the property too much. You need that to pay the bills. So that's no longer an investment. It's definitely going to become the new standard. I think 5 or 10 years from today, people are going to be blown away by the concept of. I think the future is in. So I think 5 years from today, 10 years from today, you're going to see this being completely widespread.
Welcome to the Wealth Through Real Estate Show. Today we're joined by Seif El-Sahly. Over the last 6-7 years, Seif has transformed over 190 units, turning distressed properties into profitable ventures, from converting single-family homes into duplexes, triplexes, and garden suites, to leveraging his engineering background to tackle complex renovation products. In today's episode, we'll dive into Seif's investment strategies, the secrets to his success and diverse portfolio, and addressing the growing demand for affordable housing. Seif, welcome to the show.
Thank you for having me.
Well, I'm glad to have you on. Now, Seif, would you mind sharing with us what was the first property that you ever renovated or invested in, and how did that experience shape your approach to your future investments?
My first property was a single family home that I bought that had an in-law suite potential. It just needed a little bit of TLC and cosmetic. It was a small job, $30,000. I was employed at the time, so I didn't have time to manage contractors. I hired a general contractor. Job was supposed to take 2 months and $30,000. It took 7 months, cost me $55,000, and it looked like a dog's breakfast. So it was at that time that I realized that the biggest uncertainty in real estate is construction, and I gave it a shot at trying to do it better myself.
Wow. Now, most people would look at that and they'd be like, well, maybe real estate isn't as glamorous as people make it out to be. It's probably just a bad investment. Let's just move on to something else. Maybe I should just park my money in some stocks. I like the fact that you sort of just decided, hey, I'm just going to take more control of this so that I can find a way to make it work. Now, when you looking at a distressed property for potential investment, what's the first thing or some of the things that you focus on to determine whether it's worth the time and money? Because like you mentioned, the construction side tends to vary a lot. Like you can get 3 contractors out there and they'll give you wildly different quotes, right? So how do you find some confidence in this, and how did you find confidence starting from the second one moving forward?
Well, today we're just over 200 units. What advice I would give today is very different from what I would have taken 5 years ago. If you're starting off or you're semi-experienced, you have a little bit of experience under your belt, I would say don't change the bones of the property too much. Any layout changes is always going to cost you big bucks and opens you to uncertainty. Today, it doesn't really matter what type of project I'm taking on. 2 months ago, I just bought a building. In that building, there's 10,000 square feet that are vacant. I have to take it to the city, get rezoned. It's going to take a year and another year to build it. And I'm going to add an additional 14 units in that building. But I've done it a couple of hundred times before, so I know how that works. But if you're starting off and you cannot float the cost of an additional few months on the project, or potentially 20-30% more on cost, then don't change the layout. Try and buy something with solid bones so you're only doing cosmetic and retrofit on the inside.
I love that. Yeah, start small with the renovations, and as you build up the confidence and the experience, you could sort of, start with a lipstick renovation, and then sort of you can work your way to more structural. Now, what was the driving force in terms of choosing? Let's go for the almost, I don't know if you, correct me if I'm wrong, if you were going for like the burst strategy, or if you were just looking to buy undervalued properties and just renovate them anyway, and maybe you weren't pulling equity out. But what was the reason for you choosing to keep these as rentals, as opposed to, hey, I'm going to buy properties that need work, renovate them, and then just sell them and get that capital back out?
Yeah, well, there's fundamentally what I believe in, and then there's what works in the market. So I started not too long ago, actually, in 2016. So what worked was the BRRRR model. And fundamentally, what I believe in is forcing value and forcing appreciation. So those two worked hand in hand. BRRRR model
I love
doesn't
that.
work as much now with duplex properties and whatnot. It definitely doesn't work.
Was it just that you were looking, hey, the goal is to build wealthier. It's not to just make a quick buck on buying the property, fixing it up, and selling it. Was that sort of the mindset behind it all? Is I wanna amass a portfolio of properties, so buying them undervalued, forcing the appreciation, but I'm not just gonna sell these off to the highest bid and then pull my cash out and just grow my cash. I want to actually grow my assets. Was that the reason behind you choosing to go more for rentals versus just fix and flips?
Yeah, it actually, so I'm based in Toronto, and in Canada, we have super high tax, and we also have very high costs to both buy and sell property. So the closing costs are ridiculous, and then to sell a property is ridiculous. So pretty much if you're to buy and sell a property immediately today, depending what municipality you're in, you're losing 6 to 8%.
Mm,
So the return on investment for your time on a flip isn't as good as you think it is, because even if you got $150,000 lift, you're cutting back, they're clawing back at 70, 80,000 of those, and whatever's left is then automatically taxable. When you do
yeah,
the burst strategy, the top line numbers are the same. But if you start looking at the value and what you get back in your pocket per unit time, it doesn't take that much energy and effort. It definitely takes frustration, but it doesn't take that much energy or effort to maintain a property and do the property management and deal with tenant issue in comparison to the construction. So if you look at it on a more long term and you do a burr in 5 years from the day that you stabilize the property, that's not taxable money because it's
yeah,
debt.
yeah,
But at the end of the day, it's still cash in your account because guess who's paying the debt? The tenant. So,
yeah,
in my opinion, it's income. Luckily, in the government's opinion, that's not income because there's debt issued against it. But in a very practical
yes,
sense, somebody else is paying the debt, right? If I
yeah,
lent you today $100,000 and said, "Hey, uh, you could take this $100,000," and the person next to you owes me 500 a month, I would say that you just made $100,000, right? And that's
yeah.
really what the burst strategy is.
100%. Now, tell me, for those out there listening, they're like, why doesn't it work anymore? Do you mind shedding light on that?
Yeah, I think it's been overused, and the entry point into the market has been driven so high. So the burr depends on the complexity of project that you're doing. For entry level projects, you're only getting back 50 cents on the dollar,
Hmm.
right? So it's not as lucrative as it once was, where you could refi a property, pull out all your money, and it's like you're sitting on a free house. That doesn't exist anymore.
Yeah, yeah,
There's too many people that know this model, and they just know how to do it. So, and with that, there's less barriers to entry. When you have less barriers
hmm,
to entry, there's a lot more people you're competing with, right? So the values just aren't there because that's driving up the purchase price.
100%, 100%. Basic economics of supply and demand on that. Now, question for you is, or not question, rather, one thing I wanted to note as well is, as for people to also keep in mind when you pull in the pulling your money out again, is to ensure that you're able to still cash flow, cover your expenses, that you're not going to
Yeah.
be underwater as well, right? And that becomes very tough. Now I'm curious to know what, like, if you could bridge the gap, because you mentioned like some stuff that you're working on now, and you mentioned how you started. What did that journey look like for you?
Where I started versus where we were today.
Yeah, so you started with the first project. You hired that general contractor. Things did not go as planned. You decided, well, hey, I'm going to take control of this. I'm still working, but I'm going to do this myself. I'm going to do it better, shorter timelines, and I think I could do a better job than what I just went through. So you decided to tackle the next property. How did things progress? What happened?
Well, actually, right after the first one, I decided to take over the project for the final 20%, so not a substantial component of it, and work on it myself. That's both before work hours and after work hours. During work hours, I hired a person on hourly, gave him very specific direction, and
Hmm.
that just got my toes wet when it came to starting construction. When the place was done, I posted pictures of it online, and then this was the turning point, actually. Somebody asked me uh, for a price for a rough-in of a washer and dryer. They just wanted to add laundry on the second floor of an investment property. I've never done that in my life. right? But hey, now all of a sudden I had some general handyman that's working for me on hourly. So I threw a price. I told him it's going to cost 3 grand. I asked the guy what it would cost. He's like, it'll take like just under 2 days. And I'm like, how much is the material? He's like, well, $200 in material, a bunch of miscellaneous drywall, trim, ducting, all that stuff.
Yeah.
So I went and I did that. And in 2 days, I made net probably $2,500, which was more than my paycheck.
Yeah.
And it was at that point that I realized that the way for your time to be valued is for you to jump into something that's willing to pay that cost. And that's when I started getting even more interested in construction, because I said there's a lot of opportunity there. There's a shortage and people want to pay for service. Because I would actually show up, I would actually pick up the phone, which back then was a competitive advantage.
100%, 100%. So what happened after that? How did things progress going forward?
Took a couple of oddball jobs, and then I had maybe 3 small jobs on the go. And then from there, I bought another property. So I had the property and the oddball job. So that made it easier scheduling wise. Whenever they were down on time working on the property, they'd go do the other work. From there, I asked the worker if he knew someone that needed work. He hired his uncle. And then I got more work. And then the uncle hired his son. And then I had a 3-man crew. And everything has gone up from there.
Wow. And tell me, how long did it take before you actually left your 9 to 5?
After that point, I did both hand in hand for about a year to a year and a half, somewhere around there. Eventually, I pulled the plug on it. I think I pulled the plug maybe a bit too late. I should have had a bit more confidence in myself and done it early, because there was some mistakes that I made just because I wasn't on site and I wasn't giving it the attention it deserved, that cost me a lot of money later down the line.
I see. Yeah, because the flip side is when you leave that 9 to 5, qualifying becomes a little bit tougher,
Mhm.
from the mortgage standpoint. But no, I love that story. I really do. So okay, now you into the real estate game. You got 3 people working for you. I'm actually curious, over that period of your life, what did your daily schedule look like? Because of course you're taking a big sacrifice here. You work life balance is just out the window. It's non-existent, right? What did your schedule look like? Working before work, working after work. Just yeah. Did you have a family at like what was life like at this point?
No, I didn't. I didn't have a family. I still don't have a family. Work is my life. I live and breathe it. And I think what makes you successful when you're starting from zero is very different than
Yeah,
when you have an established business. When you're starting from zero, to get from, call it, 0 to 1 million in sales is a straight hustle. It's like
yeah,
statistically, it's almost impossible, right? One in, I don't know how many people make it, but it's a hustle. You got to work day, night. You got to claw back at your spending, and at the same time, you have to be able to charge the most amount of money. It's a very difficult uh, stage to get past, which is making $0. So you just got to work day and night. After the million, you got to get a little bit smarter, and that's when you have to start investing in people. Okay, that's when you start making hires and investing into them as well, keeping them, not just a hire for a couple of months to make the most amount of money. And then that takes you from 1 million to 3 million. Uh, After that, you have to continue to, building out a mid-level management. And then after the 10 million mark is really when you have to double down on your systems.
yeah.
So at different stages, you need different things. But when you're starting off, it's an absolute hustle. You work day, night. The second you wake up, sending out emails, you're showing up on site, you're picking up material, you're finding deals on all the materials, you're getting the best prices, charging the highest that you can, and then just being able to make those jobs as many as possible and as profitable as possible. Once you made a little bit of money, you got to put it all back in, but you got to put it in your people, and then eventually start doing it in systems.
I love that. I love that. Now, question for you: how did you go about growing the sales side? Because now you had the fulfillment, you have the people. How are you putting yourself out there to grow your business?
So that's the last hat that's the last hat that I believe you should take off as a business owner, is the sales hat.
Hmm.
I know a lot of people, very large companies, 9-figure and up, that the owner is still on the sales side, and depending what industry you're in, you may almost forever stay on the sales side. I'm still involved on my sales side quite a bit. I'm less involved now with the finance, and definitely not as involved at all with the operations. but I
Yeah.
still have a pulse on the sales and marketing side because the thing with sales and marketing, it's definitely technical when you get to a certain scale, but also involves a certain artsy component, right? Where you have to be very creative and you have
Yes.
to keep your eyes and ears open, listening to new opportunities in the market, and every 1 to 2 months refreshing the marketing, putting new ads out there, seeing what the trends are. And that really requires you to have a pulse on the business and on the market. So it's a very hard seat to leave and give off to somebody else in its entirety.
Oh yeah. I couldn't agree more. I really, really couldn't agree more. Um, so, question for you now is: you're an entrepreneur, you're the investor, you have capital coming in. How are you deciding at this point? What do I put into my own investments? What do I put into doubling down on the growth of the company itself as well?
Yeah, I would say 80 to 90% of what I make goes back into the company. A few years ago was very different. I would say more than 50% was going towards my own personal investment, but I
Yeah.
realized it's a little bit selfish and it's robbing me and the team of some potential growth. And the real reason I was doing that is because I kind of wanted to put it somewhere where it's space. It's safe, sorry, like a safe
Yes.
space, which is personal real estate investment that brings you guaranteed rent, right? But that is counterintuitive to what made the business successful in the first place, because what made the business successful was taking risk and doubling down on things that work. So I had a bit of a
Mm-hmm.
mindset shift a few years ago, and now I double down on what works when it comes to business. And I would say 80 to 90% of my funds go towards that.
100%. And it's also worth considering, like, what's the ROI of like each dollar that I plug into the business versus just plugging it into the real estate, and it differs at each stage. But I was curious to see what your answer is there, because it's not a black and white answer either. Um, okay, so you've worked on a wide range of property types. When you invest in now for your personal investments, what is sort of the deciding factor on whether you want to go residential, commercial, multifamily? Do you have a preference there? What does that look like?
Yeah, I'm kind of done with residential. It's really hard to scale. I don't like the appraisal approach. The way you value residential real estate is based on comps, comparables. And that just, if your neighbor is desperate and they sell for 100,000 under, your house now is worth 100,000 under. So I actually think it's a lot bigger risk.
Yes.
Now I would much rather prefer. I mean, I just started in the commercial space, and I bought that building that we're going to be turning into 20 or depending 22 units. But the commercial is a lot more guaranteed of a route because it's a straight numbers game. You make X number of dollars, you divide it by the cap rate, that's what your building is worth, period. There's a few stipulations, but that's the gist of it.
And this current deal that you're working on, was it on the MLS? Was it something that you got like off market through a broker? What did that look like?
Now it's on the MLS. When I got it, it was a foreclosure. But in Canada, it is required by law for every foreclosure listing to go on the MLS for a minimum of 2 weeks. I got the call before it went on the MLS, just because I have obviously a history and a reputation in the city. So that's why I got that call in the first place.
Yeah.
But technically, I didn't put an offer until after it was on the MLS, so anyone could have scooped it up.
There we go. There we go. That's good to know. Yeah, because it definitely, especially in the multifamily game, it is about who you know as well. But there are deals that can be found on the MLS as well. Now, I know you've worked on ADUs as well, right? Do you want to touch a bit on what that is and why it works in your market?
ADUs is one of actually, I think ADUs, if you're talking in the long term, as a long term investment, you putting capital in today, is one of the best, if not the best bang for your buck today. Not because it's going to bring up the property value, but it's straightly from a cash flow play.
Mm.
ADUs are an absolute cash cow. You can buy a property, put as little as 120,000 into it to 250 for a brand new build and make anywhere from 2,000 to $3,000 a month in gross rent. And those don't have any debt attached to it other than the capital that you're putting into it. So it's a very good return on your investment. That's going straight to your bottom line because there's already property attached to it that is probably already going to be break even if it's a duplex or more. So it's the best bang for your buck today.
What do you find? Because you kind of alluded to this already, which is one common thing that I've seen is the cost to build it doesn't necessarily equate to the value increase that you get in your property. But like you mentioned, the upside is the cash flow. What do you find that value increase looks like, more or less?
I think the value increases a little bit comes today, but not enough. Today, you'll get 20 cents on the dollar ROI in terms of recouping with your refi. 20 cents on the dollar, a little more, a little less, depending on what you're building. 5 years from today, my personal opinion is if you're buying a house with an ADU, in my opinion, 7,000 a month is 7,000 a month. That property should be worth $1 million to $1.2 million. So I think over time, as people start to understand that this ADU is a stable investment, there's a lot of them going onto the market, a lot of them are selling, the values are slowly going to creep up to what it is theoretically worth from a cap rate approach, right?
Yeah.
At the end of the day, when people started doing legal basements, people were thinking, no, how much is a single family home? Plus, let's give a little bit of a premium to the legal basement. Now it says, how much does this thing make a month? It should be worth this. Doesn't matter whether it's coming from a legal basement or not. And eventually ADUs will make it there too. But because it's a new bylaw and it's a new concept, the market's not going to adapt it immediately. But if you do that cap rate approach based on today's prices, you're making a lot more. You're making a lot more than what the original amount was that you're putting in. So I mean, if you're building something that costs $200,000 and you're renting it for, I mean, in my area over here, $2,500 a month, the net on that is probably $2,200 a month. If you take $2,200 times 12, $26,400 per year net, and you put a 5 cap on that, which technically residential is even less, and if the market gets better, it will be even less. That is $528,000 that the property is worth, but you only put in 200. So you're making 2x or 2.5x on your investment. That's when the values actually catch up. You're going to start making that, but that's going to take quite a few years. Right now, the appraiser is going to come in and say, oh, it's this many square feet. This is the build cost per square foot. Here, you take that back, which usually ends up being 50 or 60 grand. So you're still 140 in the hole.
Now, question for you: how does that stack up against adding a basement suite? And then follow up to that, do you see ADUs as a substitute or an addition to? Like, hey, step one would be add a basement suite. Step two would be add an ADU. What's your thought process there?
Basement suite is a given. You need that to pay the bills. There's no such thing. Single family homes are not an investment. Single family home construction starts are at an all-time low in the province of Ontario. So that's no longer an investment. So it's out of discussion to even talk about investing and adding a legal basement. You're not making any money. But the ADU needs to be done in addition as a supplement to an existing rental property. Okay, so whatever is existing, whether it's a duplex, which includes a legal basement, or whether it's a triplex, that needs to already break even. And the ADU is gravy on top. That's the cash flow.
Okay, with you.
So you don't want to do it on its own. No, you want it, with something that already breaks even with the value of the home on the main structure.
Yes. No, that makes a ton of sense. Now, tell me, with the ADUs, what challenges do you face? When designing or constructing ADUs on existing properties, especially in like urban areas where like space is limited. What challenges do people tend to face?
I would say it's probably the setbacks with the lot size. If you have a massive lot, then it's a completely blank slate. You can do whatever you want. But most people don't have that. And when you don't have that, you're starting to work around a lot of existing. So that's always a challenge, just like renovation versus new build. New builds are usually a lot more predictable. Renovation is when you start hearing the horror stories because nobody knew what was behind the walls type of thing.
So what's your thoughts on, and I know you kind of alluded to like where you see, the future valuations of this, but, with the growing demand for affordable housing, how do you see the future of ADUs in urban planning? And do you see this sort of becoming like the new standard for new builds?
It's definitely going to become the new standard. I think 5 or 10 years from today, people are going to be blown away by the concept of why we used to even build single family homes to begin with. I think the future is in generational living, and generations is minimum 2 to 3 generations. And the best way to accommodate it, because people can't stand living under one roof, sharing one kitchen, sharing 1 or 2 bathrooms, is for you to have multiple units in it. And builders are already starting to inquire here, new build builders are already starting to inquire about doing purpose-built rentals, which includes ADUs. So I think 5 years from
Yes.
today, 10 years from today, you're going to see this being completely widespread. And it is in a lot of other areas in the world. The first time I realized that this even existed was when I was on a trip with my friends in Arizona, and we rented an Airbnb, and everybody was fighting over the pool house. I'm like, this is basically, and it was a 1 bedroom pool house. It's a standalone structure. It's not a condo, so you don't have neighbors everywhere and people screaming in the hallway and an elevator and parking issues. And everyone wanted the pool house because it's a good product. You still get to live on your own. The space is not so much headache that you're maintaining an enormous amount of square footage, and you can live there as
Yeah.
1 or 2 people and still be very happy.
Yeah. Now, given your experience with all of this, have you found that there are just some do's and some don'ts when it comes to a well-designed ADU?
Yeah, I mean, if it's new build, and you have a blank slate, obviously it's a lot easier to do, right? The challenge is more when you work with existing, you get better bang for your buck. So you start to work with a lot of the existing structure, which I get it from an investment standpoint. But what typically tends to happen there is like when you have these abandoned sheds and things like that in the back of the property, and you either use it as is if it's big enough, or you add onto it, there typically isn't enough light. So it doesn't feel the way that it could feel if it was properly opened up.
Okay, that makes sense. That makes sense. Now, my understanding of it all is, regardless, you kind of have to, like, even if you have a garage there or whatever, you kind of have to break it down because you have to lay a solid foundation and all of that. Does it make sense to sort of find a property that just has the open space versus one where you would have to do some demo to rebuild? What's your take on that? Or does it not matter really?
If there's already an existing structure, just make sure it's at the very least 400 square foot and up. Otherwise, you're better off to just demo the whole thing and start from scratch because there's not enough to work with. But if you have at least 400 square feet in the back, that well designed is a pretty decent 1 bedroom and definitely a spacious bachelor. It's going to save you a lot of construction costs because you don't have to excavate, pour, frame, or any of that stuff. And you only got to put in maybe 1 or 2 windows and a door. And then you can obviously do the interior retrofit. That's when you get closer to the 120,000 mark in this area. So investment wise, that's a pretty good spot to be. You just got to make sure you have 400 square feet at least.
Question for you. What do you find like the average tenant profile tends to be for these ADUs, as well as tenant turnover? Because of course, those are factors that when investors show you a pro forma, you don't see that. You know what I mean? Those are the things that you learn after the fact, really, if it's your first time getting into it. So could you shed some light on that?
Again, this is all very new in Ontario and in Canada overall. I think the bylaw was only passed 4 years ago. You know, it takes time for people to hop onto it and be the first ones to do it. And then it takes time for things to go through the city and then things to get built. So I would say they've only really become popular and getting rented in the last 2 years, right? And at least in my area over here, I'm one of the first. And the tenants that I own a few of them myself, the tenants I have not left to date. And they've been quality tenant. They've been the least headaches because you're building everything one of one. Nothing is shared. You don't have shared ductwork where 2 people are fighting or one person screaming in the middle of the night or in the afternoon and the second tenant's getting pissed off. You don't have adjacent units where they're sharing a thermostat. You don't have any of that. It's a standalone unit. So they give me the least amount of headache. They pay the most rent, and they are the highest quality tenant profile. One of them is just a young couple that want their own space and they don't want to live in a basement. And there's no other housing options other than a basement or a condo for an entry level couple. And I have another one that just recently got out of a marriage, and it's something in the interim, but he's been there for 2 years. So also very quality tenant, but it's an in between phase for him. So, but both excellent.
And for people out there thinking like ADU, is that what you would see like a garage suite? So you see like a sort of unit built on top of a garage? Is it sort of just a whole standing suite on its own? Do you mind highlighting that?
EU is by definition, is accessory dwelling unit, right? So again, accessory could be multiple things. I would say the most common is a standalone structure in the backyard, but now people are starting to put structures on top of a garage. So they have the cars on the main floor and then a door in the back where you come up the staircase, and then you have the unit upstairs as well. So that started to become an option as well.
I love it. I love it. Now, Seif, it's time for one of my favorite segments of the show called Time Capsule. So let's imagine you've stumbled across a time machine that allows you to travel back and forth in time. Now, you can't change anything, unfortunately, but you can give or receive advice from your younger or older self. So first, let's go back to when you were 18 years old. What advice would you give your younger self with the knowledge that you have now? Now, this can be business related, investing, personal life, combination of them all. What advice would you give your 18-year-old self?
Well, in a practical sense, I would want maybe the path of least resistance, and I would just see what the stock market gains are at the time and just quickly buy something like Bitcoin, because then I can make 1,000x and I'm in a good place.
Bitcoin. That is the honest answer. I would do the exact same. Like if I could go back to my 18-year-old self, the only thing I would say is just buy Bitcoin and buy as much Bitcoin as you can.
Yeah.
You get the highest ROI.
Yeah, that's exactly
no doubt
it.
about it.
And then you can use those funds to do whatever gives you meaning and purpose after. But as for the game, you won.
Absolutely, man. 100%. That is probably the most honest answer.
Yeah.
Now, if we have to look ahead to your 80th birthday, what advice do you imagine that your future self would offer you at your current age?
I would say maybe take some risks earlier. Sometimes it's a bit hard for me to rip off the Band-Aid. I do tend to make decisions very quickly, but experience has taught me that sometimes you have to think about things a little longer and not be impulsive. So it's hard for me to draw the line between when I'm being impulsive and when I'm actually thinking about it.
Oof. Yeah. That is a tough one, because being decisive, but also not just taking action too quickly and making sure that it's the right decision. Yeah, it's a tough balance. It's something that I question a lot myself, so I can completely get that.
Yeah.
Now, Seif, it's time for a quick rapid fire round of questions. So just answer the first thing that comes to mind, and let's just have some fun with it.
Sure.
So first one is, what's one thing every investor should know before adding an ADU to a property?
How much it's going to cost.
Short-term rental or long-term rental, which do you lean towards?
Long-term rental, because it works better over a certain period of time.
Love it. Most rewarding part of building garden suites?
I would say it's the end result, and then looking at a quality tenant moving in and actually loving the space, not a tenant that's just looking to park themselves somewhere for a year and get out of, and be somewhere else. They can treat the ADUs like a home, right? Nobody treats a basement like a home. It's just an in-between phase.
That's true. Yeah, that's true. That is every investor's dream, right? A tenant that's going to come in, love it, and stay.
Yeah.
Best tech tool for project management?
For us, it's Builder Trend.
Builder Trend. Okay. You mind sharing a little more on what Builder Trend is?
Builder Trend is an all-inclusive CRM that manages sales, project management, and finances. Under project management, you have things as simple as timekeeping, to schedules, to purchase orders, bills. Under finances, you have invoice, job budgeting, cost trackers, selections that the clients do in terms of interior finishes. So it's an all-inclusive CRM and project management tool.
Oh, I love it, man. I love it. Would you say it's more catered for what you offer as a company, or more so as open to like just general investors for managing their properties and what they have on the go?
No, definitely for a contractor. If we're talking about real estate investors, I have another CRM. It's called Buildium. And that's good for managing rent coming in, expenses, leases, when tenants are supposed to move out, how much they owe you if they're behind on rent. So Buildium.
I love that. Okay, Seif, I want to thank you so much today for sharing your invaluable insights. Now, for listeners that have gotten to this point, they're like, man, this guy shares a ton of golden nuggets. I want to follow him, and maybe actually I'm in his area. Maybe I want to use him for building my first or my next ADU. Where can people find out more about you?
Instagram is usually the best. That's where people start, and then we have a link tree from there, and everything funnels from there. So the company Instagram is New4, That's NEWFOREINC, so Nufor Inc. or contractors. And my personal is Seif El-Sahly, SEIFELSAHLY. And in there, I share a lot more stuff, and including personal views as well. So.
Awesome, brother. Awesome. Well, I'm going to make sure to leave all of this in the show notes below. So for those people that just want to go ahead and quickly click through the links, it'll be all there below. But I want to thank you so much for coming on. To our listeners, go follow Seif, see what he's doing, in the world of real estate. And, if you enjoyed today's episode, of course, subscribe so that you never miss an episode. Leave us a review. And as always, keep investing smartly. Seif, thank you so much, brother.
Thank you so much, my man.
Thank you for tuning in to the Wealth Through Real Estate Show. If you want to learn how to master infill development, or at the very least get into it, you absolutely need to check out the episode with Darren Burrows. This is your host, Aure Noble, signing off.